and welcome to my channel. I'm Doris. I'm here to share with you about my stock account and today's market updates. Right now, the net asset of my account is $70,551.76. Today, Apple has closed up 2.11% to 193.42. SQQQ closed down 0.73%, and SPY closed down 0.02%. United Natural Gas closed down 0.75% to 5.3. The market generally closed mixed. Dow Jones Industrial Average closed down 0.22%, Nasdaq closed up 0.31%, and S&P 500 closed down 0.06%. Today, the consumer electronics industry closed up with a leading gain of more than 2%. Wall Street closed mixed on Tuesday. Treasury yields tumbled. Job vacancies fell to a 2.5-year low in October. This week's market focused on Friday's non-farm payrolls data to further judge the path of U.S. interest rates. Investors avoided making big bets ahead of data. Yields fell sharply on Tuesday. The yield on the 2-year Treasury note fell 7.5 basis points to 4.583% after hitting an intraday low of 5.56%. The yield on the 10-year note fell 11 basis points to 4.1676% after falling as low as 4.163%, its lowest level since September. The yield on the 30-year Treasury bond fell 13.7 basis points to 4.3%, its lowest level since September 15th. All three major U.S. stock indices posted their fifth straight week of gains last week. In the past month, the Russell 2000 small-cap indexes rose nearly 7%, reinforcing hopes that the market rally would widen. But experts have put out that the U.S. stocks may be at risk at 2024 as the economic slowdown is expected to put pressure on corporate earnings, and weaker pricing power threatens margin. Combined with high valuations, crowded positions, and low volatility, U.S. stocks could create a very fragile structure. Jason Heller said, "We believe there's little catalyst for stocks to continue rising, given the high level of interest rates, consumer weakness, and weaker earnings expectations. We expect stocks to remain within a narrow trading range." The Fed is now in a silent period ahead of its December policy meeting, which means the Fed officials will not speak publicly until the next week's policy meeting. Despite recent hawkish comments from a number of Fed dignitaries, traders are confident that the Fed will start cutting interest rates next year. According to a Fed CE Fed Watch tool, monetary markets expect a 70% chance of a rate cut in the first quarter of next year, and 25 basis points cut by the end of 2024. On the economic data front, the Labor Department reported that the U.S. job openings in October fell to their lowest level since in nearly 2 years, suggesting that the historically tight labor market conditions may be coming snug. It reported a total of 8.73 million job vacancies in October, down 617,000, or 6.6% from the previous month. That figure is well below the Dow Jones estimate of 9.4 million, and is the lowest level since March 2021. The declination in vacancies has reduced the ratio of vacancies to available employees to 1.3 to 1, up from about 2 to 1 just a few months ago. Policymakers are watching the report, called the Job Vacancies and Labor Mobility Survey, for signs of select labor market conditions. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.